guys, and welcome back to another episode of attempting to turn 10k to 100k over time. So last week I haven't really entered any positions again, which on hindsight I should have, especially those companies that I have recommendations for. Right, if you watched last week's weekly market update video, I was very interested and keen on entering some crypto positions, but I didn't. But they have ran. So that's another topic I would discuss in my weekly update video. But for today, I wanted to just make a quick video to document my psychological approach to investing, my flaws, and how I could and plan to tackle them. Because I believe that investing is an ever lifelong journey, right? And it's constantly strive to improve myself and better my investment approach. And especially since what happened last week, I feel that I should tackle this head on. Otherwise, I think at this rate, right, I probably will not invest into anything at all because of my flaws and drawbacks as an investor. So let's go through that list. It's sort of it's like a list that's always a work in progress. As I grow as an investor, I learn and make mistakes. I will add on more content to this list, and go back and read it time to time to remind myself of what I should do as an investor. So I have segmented this list into different categories of investing, right? So number one is my goals and objectives and my characteristics as an investor. So number one, my objective and time frame is to aggressively invest 10k and turn it to 100k over the span of 5 years. Okay, my natural bias, I'm naturally bearish. I always feel that the market's overheated, which is also why I feel that and if you have also seen that since I think I started this channel about 1 month back, I have yet to invest into anything. That's because I'm naturally bearish and waiting for the market to pull back heavily before I enter, right? And my natural risk appetite. I'm risk averse in nature, so I'm not someone that likes to take huge risk. But that's quite ironic and contradictory to my objectives, right? So this is something I need to fight internally most of the time, and every day actually when I'm building such a aggressive portfolio. Number three is information and idea source. So I think this is quite important, especially as a retail investor, because you don't have like an army of analysts working for you to, generate ideas for you to catch your next multi-bagger, right? So these are my current news sources for now. So number one, the news and media. So your articles, things like that, whatever business channel, outlets that you get news from, like the Forbes, Seeking Alpha, things like that. Number two, YouTube and forums. So I feel that this has been the most value-adding kind of channel for me to get ideas and information from, because especially YouTube, because you have content creators out there that particularly niche towards a certain stock or a sector. They may have on-the-ground knowledge about this kind of sectors and industries and companies itself most of the time, and then they share insights that you normally as a retail investor searching on the internet and whatever information that you get from the company's website, you may not grasp the full picture. And doing this, right, allows you to number one, save time, number two, gain access to things that you wouldn't normally would have, right? And number three, just to get things done a lot quicker. And forums also is another information source. So for example, Reddit, and things like that. But it's always very important to fact check this kind of information from content creators to the best that you can, even though some of the information out there may not be readily available. But always fact check and double check to make sure that they're just not pulling things out of thin air and just telling you lies, right? Number three, friends and family. Maybe you have your friends and families, they're working in certain industries where they're seeing new competitors coming up that's getting a lot of market share, and they're sharing to you over lunch or dinner and things like that. These are some insights where you can potentially dig deeper into and look into the company's fundamentals. Number four, stock screener. So I use Stock Penguin's stock screener quite frequently to find out the list of companies based on the quantitative attributes that I want to, right? Number five, work experience. So I'm in the industrial oil and gas space. So if I spot any cyclical trends over there that's emerging, I may have a first mover advantage in terms of my experiences and knowledge there, right? So looking through this list of like criteria, my objective, time frame, natural bias, natural risk appetite, and information and idea source. So based on this, what's my next best course of action to improve myself as an investor, right? So number one is to constantly remind myself that to achieve my targeted returns, I would have to be aggressive in my investments and to be comfortable with the risk I'm going to bear. So, investing in growth companies, tech companies, to achieve the multi-bagger returns will come with its natural volatility, which I have to be comfortable with, because I can't just whenever I see a big drawdown, I just get super emotional and start selling all my shares. So this is a surefire way to lose money, right? Number two is to be open to new ideas and opportunities. So I have my bias towards I tend to be naturally bearish, right? So anybody brings up any new opportunities and ideas, I would try to see the worst case instead of the best case of such situations, right? And scenarios. So don't just turn everything down. Research further, and as I research further into the topic, the bearishness, whatever bearish factors I have, may be cleared out, and I will see the bullishness in whatever opportunities that this information and idea source brings up, right? Number two factor, not factor, but the second step, right? Researching investments. So I had to ask myself, what are the preferred types of companies and sectors that I like to invest in? So particularly for this portfolio, right, I am looking for tech and growth stocks, right? So these are the ones that I think presents the most clear-cut opportunities to attain multi-baggers, right? So because of that, I generally tend to avoid cyclical or industrial names, which I think these sectors itself may have new advancements, right? So think of companies like Exxon, which have a hardware plus software element to it, and this company operates in the self-defense segment, right? So in the past, they just used to sell tasers, but now they have new sorts of software solutions that's even integrated with AI that's helping to drive the company's growth. And if you've heard of this company and look at its stock price, right, it has grown tremendously over the past few years. So don't just cut out a traditional industrial name just because it's old. Always look, if there's an opportunity, look deeper, and you may find a gem. Number two, my preferred market caps. So mid caps to large caps, because now I feel that maybe the smaller cap there is, the less information you can extract out from the company and what it's doing, besides just whatever they choose to report, right? The mid caps and large caps are covered by more analysts and even finance creators, so there is a safety element to that. And number three, I like to ask myself, do I like to invest in comfortable names and sectors? Yes, I do, but this potentially limits. I haven't typed this finish, but limits the world array of companies I can invest into. So I will miss out a lot, right? So, for example, if we talk about tech names, I will usually just invest in the Magnificent Seven and other, your AMD, things like that, because it's widely known. But there are other names out there that could present you the growth that you want. For example, before Robinhood was a thing, that's gained a lot of popularity, right? You wouldn't have heard of Robinhood before unless you are in Wall Street bets and things like that, and especially if you are not living in the US. But that company itself has returned I think a good 5 times over the past year or so, 1 or 2 years, right? So if you don't know these names and sectors, you will miss out. So this comes to my next best course of action that I could take, right? Is to continue with the types of companies and sectors I am eyeing for, because this is the most opportunity for multiple expansion and faster growth, which is the tech and growth space, right? And also, let me type it out, is to read widely and just investigate and research further whenever I have the time. So investing, I feel it's a lot of reading and learning game, and we have to always be open to new ideas, and that's where you can find new opportunities to invest in the next multi-bagger, because some of these multi-baggers are always rule breakers and disrupting the space. So just always be open-minded, read widely, do your fact checking, and that's how I think I will approach researching investments for now. And this is my biggest problem, right? Entering investments. So these are the questions I have for myself now. So number one is, how much do I need to know before I enter? So to me, right, I naturally feel that there's always more to know before I feel comfortable enough to enter the position, which is very, very bad. So because of this, right, I tend to never get anything done. This is the same as like if you're an entrepreneur looking to start a business. Well, you're not an entrepreneur, you're like a corporate guy looking to, you hate your job and you want to start something of your own. But because you feel that you lack the knowledge, you lack the experience, you'll never get started, and that's why you're just running on a treadmill. So for me, this applies to investing. So I always feel that there's always more to know, more information to take before I feel secure enough to enter. Right. Number two, does price matter to me? Yes, because I always feel like I want to catch the bottom. I want to extract the most meat and get the most value of my investments. But this is bad, right? Because of this, winners just keep winning and then just keep going higher. There's always no pullback for me to enter, right? And also, I tend to take into account the previous highs and previous lows as a basis to enter new investments. So if a company that has broken this previous high and is running, right, I will always think that it may retest its previous support level, where it broke out from the previous resistance to the support level, and that's where I will want to enter. But most of the time it may not happen and just keeps running and forms new consolidation zones where it goes higher. So yeah, this is my problem. I do not like chasing the market, and this leads me to miss out on a lot of potential winners, right? And the next question is, does fundamentals or technical matter more to me? So fundamentals to me is very important for the long-term prospect of the stock. But then again, I always use technical analysis to enter positions. So and this I think leads back to if price matters to me. So this is why I always like to catch the bottom and I like chasing the market, because I always use technicals to enter positions for longer term investments in stocks, right? So this is quite contradictory. So this is something I need to note. Do I like to scale the positions? So to be honest, so far I do not have experience scaling the positions, right? Because I always deal in naturally smaller accounts. I just buy one position and just let it be. So I don't have the experience scaling the positions. But I think this is something that I will have to learn over time as my account size grow, right? When I would look to buy a stock and then continue adding to it. Next question is, do I average down or average up? Or do I enter positions at max allocation from the get-go? So I have averaged down in the past, which is a mistake. I averaged down on stocks like Alibaba previously when it was selling off due to the whole crackdown in the Chinese tech space, right? So this is a mistake. Low can go lower, but I have yet to average up. And I tend to max allocate from the get-go, so I enter the position size that I want to from the start. So I think this also leads back to the problem of why I like to, bottom fish, right? Because I tend to enter the positions fully at one go. So this is something I could, maybe note out for. Have I bought a stock that I've sold before? So no, I tend to buy, hold, and sell a stock. End of story. But the thing is, a lot of times, right, the companies that I have entered before previously, I have sold, and I have this natural bias of not wanting to touch it again. But a lot of these stocks have ran up a lot. So for example, AMD, which is one, TSM, something I bought before and sold, but the stock just kept on running, right? But at the same time, the company's narrative and fundamentals make sense to invest into even at prices higher than the prices I've sold for. So this is something I also need to note down. So my next course of action is to have a stock picking checklist and follow a systematic approach to both fundamentals, longer term investing, and a price entry range for comfortableness. So this may be in terms of valuation and things like that. So, and number two is to separate investments and trading to separate portfolios and stick to the time frame that I have allocated for this investment. So I think it may help to separate investments and trading, right? So your whole emotional state and your psychological approach to both managing both positions and entering positions isn't mixed up, which is I think I tend to do in the past, where my investment became a trade in terms of taking profit, and my trading became an investment in terms of cutting my losses, right? So always take note of that. And to also compare my existing positions to new potential positions and which is more promising down the line, maybe 2 years out, in terms of its fundamentals, narrative, its prospects. Always don't be afraid to rebalance your longer term positions to another more promising one if you feel it's the right thing to do, and after you have done your research. And I think that having a stock picking checklist, following a more systematic approach, and making sure that the valuation is safe, right? There's a margin of safety. It may help you build conviction into holding a stock, right? Which I will share more later. And which now actually, so managing positions. So do I constantly check the prices and performance on my portfolio? Yes, I do several times a day, even though that's in the past, right, where I have not for this portfolio at least, but my other portfolios where I have stocks in, I always check it, right? So I think that's not a very good habit, especially for longer term positions. How do I feel with volatility and drawdown? So I am surprisingly decent with volatility because I invest in the amount that I'm comfortable with. It's just that I'm super picky with picking up entering stock. So that's something I feel that I'm okay. I do well with drawdowns. So do I average down up? So I think again this repeated point, but I feel it's relevant when you're managing a position as well. So because you're rebalancing you're allocating capital, right? When you're averaging up and down to existing positions, right? So how many stocks do I prefer to manage and keep updated with? So for me, a smaller list of 5 to 10 stocks. This is so, I have conviction. There's more convicted bets I think that could help give you the outsized returns that you want. If you have too many stocks, you're just gonna mimic the returns of the S&P 500, right? And also, I like to know my investments well. Now, do I mix up trading and investing? Yes, like I mentioned earlier. Sometimes I look at the charts and I think it may be a good time to get stopped out or take profits, which on hindsight is very bad for my longer term investments because some of them became multi-baggers and I'm down there like, what am I doing? I just exited a multi-bagger position for a 20% gain, which is stupid, right? So my next course of action, understand my time frame and do not check my positions that much unless there's something fundamental announced, right? Separate investing and trading and take a rebalancing approach to things. So you have to think like a portfolio manager. Don't just, think like a trader, especially for like a growth portfolio, right? Now, lastly, exiting positions. So do I exit positions because I feel that the fundamentals have changed? So to be honest, rarely, because it's always been a technical thing for me. This caused me to miss out many multiple baggers. So I like to open up the charts and then look at how my longer term positions are doing. Like, it might hit a resistance level, then I'm gonna take profit because I always feel that there's another chance to re-enter at a more like a support level or things like that where I could capture that extra more meat. But it's always never worth it, man. Do not do this if you are in a convicted bet, and especially if you enter into nice pricing, right? So do I exit positions because I feel that another stock has a better opportunity than what I'm holding? Never. I have never done this, right? So I feel that this is something that I would have to consider, especially since I am gonna have a portfolio of just like maybe 4 to 5 stocks in this 10K portfolio. There's always going to be opportunities I'm looking out for to rebalance, especially since if the narrative of the potential company is better than the ones I've invested in. So I'm going to take think like a portfolio manager, do not think like a trader approach for this portfolio. Do I take into account valuations when I'm exiting? So as mentioned, never. It's always been a technical thing, which is why I missed out on a lot of multi-baggers. But I think taking into account valuations is something that's good to adopt, especially if the investment size have grown, right? And then you are in the position where you can take partial profits. You have to take into account valuations then, right? Because you don't know how much higher can go. But at the same time, if you're feeling uncomfortable with your investment growing that much in valuation, you can take partial profits. So that's something I'm gonna adopt when I'm for this portfolio moving forward. Which is some as mentioned here, especially if the thesis still remains intact and it's just the valuation that's expanding, right? Lastly, do I sell a stock just because I see the technical stop loss, but the thesis is still intact? So yes, I have, and this is a very bad habit, right? Because a lot of these companies, they sell down on temporary weakness in the stock market that may not have anything to do with the company itself. It just sells down. Here's my technical stop loss, and I'm out of positions. But then when the market when the sentiment recovers, right, these companies tend to outperform and then just rally crazily. So this is something that happened to me with Meta. So it's something that I regret, right? So I'm gonna take this into account heavily as well. Next course of action. Separate investing and trading. Identify why a stock is selling down in the short term if it has anything to do with the fundamentals and thesis of the investment. Keep in touch with the fundamental developments of your portfolio companies and also potential companies that you're going to invest into. Social sentiment, valuations, the positions that you're holding. And most important point, always let your winners run, right? So I hope that coming up with this checklist and all these questions that I ask myself is something that you viewers can use as well to help, assess your current psychological approach to investing and managing your positions. And maybe you might find something new when you ask yourself these questions, and naturally you'll come into what you should do next, right? So that's all for today. Thank you.